Every year on the outskirts of Karachi, a temporary city emerges from the dust. This is Sohrab Goth, a massive livestock market that, for a few weeks, transforms into a high-stakes financial hub. The scale is immense. Ahead of the Eid al-Adha holiday, over 700,000 animals are driven onto this patch of desert from across the country. The assets moving through these pens are elite. Traders deal in 1,000-kilogram CB Baghnari bulls and beautifully speckled Cholistani cattle, with individual values reaching thousands of dollars. To the untrained eye, it looks like pure chaos, but look closer at the men standing between the animals, and you'll see a sophisticated economic system operating in total silence. While the market screams, the highest-stakes trades happen without a word. Two men stand perfectly still, their hands joined and hidden under a single piece of fabric. This is the Gupt Bhao, or the secret price. It is an internal logic where the terms of a deal are settled entirely by touch, long before any currency is ever seen. Under the cloth, the hands function as a terminal. The fingers are the keypad for inputting bids. For a bull this size, one finger squeeze translates to a currency tier, like 10 to 100,000 rupees. By squeezing 3 fingers and a joint, a buyer communicates a granular bid, like 350,000 rupees, without leaking data to the crowd. A tug, a shake of the head, or a counter squeeze is the only response. The fabric hides a physical logic that processes complex negotiations in plain sight. Why go to these lengths? In a market this size, you would expect the transparency of a public auction to drive prices up. The secrecy exists to maintain information asymmetry. It protects the middleman, known as the biopari. These brokers buy livestock from rural farmers and transport them to the city. If the final sale price is shouted aloud, the farmer learns the broker's exact profit margin. The cloth acts as a physical shield, blocking the view of the final price to protect that spread. By keeping the numbers under the adrak, the broker ensures that the person who raised the animal never knows exactly how much the end buyer is paying. This hidden handshake also prevents a phenomenon known as price anchoring. If a wealthy buyer publicly pays a massive premium for a bull, every seller in the vicinity will instantly anchor their expectations to that outlier. The secret handshake keeps these prices private, preventing artificial inflation from freezing the market. Then there is the social cost. In high-stakes negotiations, a low-ball offer can be a public insult. The cloth provides a shield, allowing a buyer to make a ruthless offer and a seller to reject it without either party losing face in front of their peers. The practice manages the volatility of the market. It dampens sudden price spikes and allows for aggressive negotiation, keeping the assets liquid. The tug-of-war can last for minutes. The crowd watches the faces of the traders, looking for micro-expressions that signal where the price is moving. The resolution is physical. When the palms slap together and the hands come out from under the cloth for a firm, visible handshake, the contract is executed. Only now does the money appear. Thick bricks of cash are produced and counted in the open air. The trade has cleared. This sequence, anonymity, a private negotiation, and a sudden clearing of the asset, mirrors the function of a Wall Street dark pool. Sohrab Goth shows that the underlying pressures of any market are the same. Whether it's high-frequency trading or a handshake under a cloth, the goals remain: managing information, mitigating risk, and keeping the trade moving.